Welcome to Learn Commerce PU online classes. Don't forget to like our video and subscribe our YouTube channel for all the updates.
Hello students, welcome to second PUC Accountancy online classes. In the previous class we have solved a problem, that is problem number 19, Ganga and Yamuna, right? Now let us move on to the next problem, problem number 20, page number 81. Page number 81, problem number 20. Let me read out the problem, then we will analyze and then let us solve the problem. Anu and Tanu are partners sharing profits and losses in the ratio of 3:2. They agreed to dissolve their firm on 31st March 2018 when their balance sheet was as follows. Refer balance sheet on the liabilities side, capitals, you know it very well. That is the capital balances which should be taken as a starting point, isn't it? By a balance brought down on the credit side of their capital accounts. It will not enter realization account, remember. Reserve fund we have dealt with in the previous problem, so you know it very well, should be transferred to all partners capital account in their profit sharing ratio. Profit sharing ratio is given 3:2, so give credit to partners capital accounts. Then creditors and bills payable, both are outside liabilities. Both are outside liability, external liabilities should be transferred to realization account. Let us take up asset side. Assets are arranged in reverse order, isn't it? There is least liquid to most liquid. Machinery, investments, stock, sundry debtors, cash at bank. Cash at bank should not be transferred because it itself is the most liquid one, other next to cash in hand, right? It cannot be sold in the market. So other assets other than cash at bank, all should be transferred to realization account. Then read additional information given. The assets and liabilities were disposed of as follows. Sold like this, they told. Machinery were given to creditors in full settlement of their account, and stock were given to bills payable in full settlement. What does that mean? You need not have to make any payment to creditors, very simple. And you should not worry about machinery because it is given in full settlement. After giving the machinery, the creditors balance will be settled in full settlement. So what we have to do is, we should not sell the asset, that machinery. Machinery should not be sold while realizing the assets by bank account. Assets realized, under that we should not write machinery. Then on the liability side, while making payment to creditors, we should not make any payment to creditors. Should not make payment to creditors because machinery was given in exchange of their claim, in exchange of the claim of the creditors. Then bills payable also we have to treat in the same way, that is stock were given to bills payable. So don't realize the stock on the credit side and don't make payment to the bills payable on the debit side. Clear? Tanu to core investments at book value. Sundry debtors of book value of rupees 50,000 were taken over by Anu at 10% less, and remaining debtors realized rupees 51,000. That means only one asset is realized here, that is half asset is realized. Debtors, half of the debtors were taken over, isn't it? Worth rupees 50,000 were taken over by Anu at 10% less. That means 50,000 into 10%, that is 5,000, right? 5,000. That is taken over by Anu. So on the credit side, by Anu's capital account, part of debtors taken over, how much is the amount how much amount should be returned? 45,000. 50% worth debtors were taken over by Anu at 10% discount. That means 50,000 minus 10%, that is 5,000. So, for 50,000 minus 5,000, the amount realized is, the amount of the debtors was how much? 45,000. That is what we have to do here. Then, remaining debtors were realized at rupees 51,000. So, on the credit side, by bank, assets realized, under that debtors 51,000. That's all. Very simple entry. Realization expense amounted to rupees 2,000. You know it very well. On the debit side, to bank, within bracket, expense of realization. Your problem is solved, right? Yes. Let me solve now. Realization account. Start drafting the columns. Realization account. Yes, debit credit, you know it very well, wasn't it? Then particulars, amount in rupees. Write the column headings, provide for JF on either side. Yes, now let us solve the problem. Realization account to machinery account. Machinery account. 70,000, 70,000, investments account, investments account, investments account, how much? Investments, 50,000, right? Yes, 50,000. To stock account 22,000, 22,000. Debtors 1,03,000, debtors 1,03,000. That's all. Move on to the credit side. By creditors account, transfer liabilities. By creditors account, how much? 60,000, 60. By bills payable account, 20,000. Bills payable account, 20,000. 20,000, isn't it? That's all. Now, let us sell the assets. By bank account, assets realized. Assets realized. Assets realized. How much? 51,000. Only debtors. Only one item is there. Write debtors 51,000. Write it in outer column. No need of writing in inner column because only one asset is there, right? Then assets taken over by the partners. Before that, let us make payment to liabilities. Whether we made any payment to liabilities? No. We didn't do any payment to liabilities because we exchanged their claims against our assets. We gave assets to them and satisfied their claims, both creditors and bills payable. So, no payment was made, wasn't it? So, we cannot pass bank entry here. We cannot pass any bank entry here. So, we should not make any entry for that. Clear? If we pass bank entry, then there will not be amount. Amount will be 0. So, no need of passing this entry. Either you can pass like to bank liabilities paid off then you can write within bracket their claim minus the amount that is given in exchange and write nil for that. Total amount, that is 70,000 suppose. Creditors, how much the amount was? 60,000. 60,000 minus 60,000 you are right. We gave them some asset, that is buildings were given, right? Not buildings. Sundry debtors of book value of rupees 50,000 was turned to core investments. Machinery were given to creditors. So machinery, what you have to write? To bank, sundry creditors, within bracket 60,000 minus 60,000 you have to write. Nil, 0. Then bills payable, you have to write how much is the amount bills payable? 20,000 minus 20,000, 0. So in you have to write 0 in outer column. Or you can omit that entry. Omit that entry. Let us pass that entry. I will pass this entry to bank account. Liabilities paid. Liabilities paid. Isn't it? Sundry creditors. Sundry creditors 60,000 minus 60,000. Nil, 0. 0 is equal to 0. Bills payable 20,000. So 20,000 minus 20,000. 0 is equal to 0. Outer column 0. So this entry you can pass. Then there is expense of realization, right? So to bank expenses of realization or simply expenses 2,000. Then assets taken over by Tanu's capital account, investments taken over by Tanu's capital account, investments taken over. Taken over. How much? 50,000. By Anu's capital account. Anu's capital account. Debtors taken over. Debtors taken over. Debtors taken over. How much? 45,000, right? 45,000. By all partners capital account. All partners capital account. Capital account. All partners capital account, that is there is a loss. See, debit side total is greater than the credit side, so there is a loss. 2,47,000 is the total of debit side. 2,47,000. Then write the same total on the other side, 247. There is a difference of 21,000. 21,000. Distribute it among the partners, Tanu and Anu. Tanu and Anu. How much it is? Anu and Tanu it is, not Tanu and Anu. Anu and Tanu. What was their ratio? 21,000 into 3 by 5. 21,000 into 3 by 5 and 21,000 into 1 by 5. 2 by 5, sorry. 2 by 5 is equal to 12,600 and 8,400. 12,600, 8,400. That's all. So total will be 21,000. Loss on realization. Loss on realization balancing figure. Balancing figure. That's all. It's done. Now let us move on to the next part, that is combined capital accounts of partners. Draw the columns: open account, combined capital accounts. Yes, only two partners are there, two amount columns on either side. Yes, Anu and Tanu. Write the column headings: debit, credit. Write in rupees. Yes, capital accounts by balance brought down. By balance brought down. Write the amount. How much? 90 and 80. 80,000. Then by reserve fund. Reserve fund 10,000. Reserve fund ratio 3:2. 3:2. Write within bracket. 6 and 4. 6 and 4. That's all. Then there is a loss on realization here. That is all partners capital account related to realization account. So capital account is debited with realization account. To realization account, loss. 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 If there is a profit, it will appear on the credit side, remember, right? If there is a loss, on the debit side. Then write the amount 12,600 and refer there 8,400. Refer your realization account, right? Then to realization account, investments. That is a realization account, assets taken over, investment taken over, investment taken over, investment taken over. Yes, investment taken over. How much? 5,000 in Tanu's capital account. Is 5 or 50? 50,000, not 5. 50,000, right? Then other partner took over which asset? Tanu took over investments and Anu took over debtors, sundry debtors, right? So we will write here assets taken over in Anu's account 45,000. We will write here instead of investment, we will write assets taken over. Make it as assets taken, no need of passing two separate interests. Assets taken over, right? 45 and 50. Then now close the account, find out the difference. That itself is the final balance that is to be payable. Credit side 96 and 84. 96 and 84. Here write the same total on the other side, 84,000. Find out the difference to bank account. To bank account, final payment made. Final payment made. Yes, so balancing figure. Balancing figure. How much? 38,400. 38,400 and 25,600, right? 25,600. That's all. Now, let's move on to the last part, that is bank account. Bank account. Draw the columns, write debit credit, write column headings, provide for JF. Yes. Start with the opening balance. Bank always, cash at a bank always shows debit balance, right? If it is overdraft, credit balance. To balance brought down, all assets shows debit balance. This is on the debit side, so debit balance. 15,000. Then assets realized. See the entry, realization account debit to, bank account debit to realization account. So bank account debit to realization account, assets realized, refer realization account. Assets realized, take the combined amount, total amount, isn't it? How much it is? Only one entry is there, 51,000. That's all. Now, payment is made, isn't it? Expenses of realization. So, by realization account, there are no payment to liabilities because it is mutual settlement, isn't it? So, here expenses. How much is it? 2,000. Yes, it is 2,000. No other payments to be made. Close the accounts and make final payment to the partners. Your bank account must agree by Anu's capital account. Anu's capital account. Final payment. Final payment. Then by Tanu's capital account. Capital account. Final payment. Final payment. How much? 38,400. 38,400 and 25,600. 25,600. See the total. It is 66,000. On both the sides, it agrees. So, this is how you have to solve a problem. Whenever there is a asset taken over by the creditors and bills payable, isn't it? So, I took up this in the class, otherwise I would have given for assignment. Now, take the same problem as your assignment question. Solve same problem and submit as your assignment, and submit assignment on time. Thank you for watching this video. Thank you.
Don't forget to like our video and subscribe our YouTube channel for all the updates.